All right, here's a mini lesson in counting flats, guys. A flat. Okay, there are 3 different types of flats, but they all have the same wave count. Okay, so the first type of flat, they're all measured AB or labeled ABC. You got A, which is 3, B, which is 3, C, which is 5. Okay, so it's going to be a 3, 3, 5 always. Now the B wave has to come 90% for it to be a flat, but it can come below the origin of the A wave, and that would be a different type of flat. That would be called an expanded flat. This is a regular flat right there with 90 to 100% retrace, and then a running flat is when you get the C wave it goes up in 5 waves, but it does not overtake the end of the A wave, and that's a running flat. So that's a real quick, lesson in flats. There's 3 of them, 3 types, but all the counts are the same. You're going to have 3, then you're going to have 3, and then you're going to have 5. Okay? All right. So with that count, what you'll notice is right here, I've got this little guy identified right here, and let me and I actually posited this as a possibility earlier, and I'll show you the count. We're going to zoom in just a little bit. Let me clear the. Do I want to clear the chart? No, I don't want to clear the chart. I want to just erase some things. Okay. I'm going to go down to a little bit of a smaller time frame. That's a good time frame right there. Perfect. Okay, now let's zoom in on this guy. So we had kind of an impulse down here, and then what you notice here, we had a three-wave move back to the upside. Okay, you see that 3-wave? And I would call that a zigzag. It looks like a 5-3-5 to me, best I can tell. I pull the fibs on it, you'll see where the wave came. It's got a 3-wave shape, and it came to the 127 extension. Perfect. So that's a good 3-wave. Now one might say, hey, now we're going to go down, and sure enough, you got an impulse wave with a 3-wave pullback that was really deep. It came back almost retraced the entire thing, and I was like, that's pretty big. So I thought, this is a prime time for them to do this. Boom. And then take it up and mess everybody up. And that would be a 3-wave move. And that's what a flat does. It looks like, see how this one was coming down and it even overtook the origin of the A wave there? And then it got, everybody started FOMOing in. We got continuation. And so there are a lot of people going short down here once it broke out of that level. Right? And then what happened? Came back up. And how did it come back up? In 5 waves. Fast. Why? Because it's got to get out of Dodge. It's got to leave all these positions in the dust, so they'll let go of their positions up here when they break this level. So now when they let go of their positions, what happens next? Well, after that 3-3-5 finishes, it's going to go the way they expected. Now that's the way flats function, but let's finish counting this flat. Okay, the second one, so what you do is you count each 3-wave like it's its own 3-wave, and you want to see if it measures right and it looks right. Okay, so the first wave is 3, check. Let's look at let's put a little, that fits the 3-wave. Now I got 3 waves here, it looks good. I need to see a 5-3-5 here. That's basically, so I want to check and see if that's a 5-3-5. Now this one got a little extended. It wicked the 1618, but you see the body of the candles are around the 127. So again, that's a beautiful, nice 3-wave move that ends in the corrective pocket where we expect. Okay, and then we expect this to be an A, B, C, and C always has 5 waves. I encourage you to count the subwaves there. 1, 2, 3, 4, 5. I was waiting down here. Once this 5th wave was created, I took a long for that, and I just took profit. Okay, but that's finished. That's a nice 3-wave move that actually broke the low. Okay, so which type of flat, as I talked to you, a regular flat, an expanded flat, or a running flat, would this be categorized as, since the B wave broke the origin of A? Regular, expanded, or running?
Expanded?
Expanded. And it's really easy to remember. It's like this wave is expanding, beyond where it should go. It's gone farther than you expected it to go. It's expanded. So that's the way you can remember it, maybe. And then the C wave. So we go ahead.
Yeah, sorry. Would the first flat as well also be expanded because the C wave went higher than the B wave, that first one?
No, the C always generally goes higher than where A ends. That's normal.
Okay.
That's normal. When C is shorter than A, that's abnormal, and that's what we call a running flat. No, it's only when the B. See, okay, good question. Let's talk about it for a second. Why is this tricky? Well, normally in an impulse wave, you get a one wave and a two wave. And what's the rule about the two wave? What can it not do?
Doesn't the two wave have to come back 90%?
No. That's for a flat. I'm just talking for
Okay.
for an impulse wave. For an impulse wave,
Oh, it can't. I guess it can't. It can't go back beyond the origin, right?
right? It can't retrace beyond the origin of that. So when we get a break of the origin of the first wave, we rule out that can't be a 1-2 anymore. So we think, oh, it must be going down. Especially in a flat, when this goes up in three waves, you're thinking, oh, there's a three-wave correction. It's finished, right? And so this starts to go down, and then it breaks the origin of A, and a trader would say, oh, yeah, that's good for a short. And then all of a sudden, this comes up like that. You're like, what's going on? Because the first leg was three waves. You're thinking, okay, corrective wave, this is going to keep going down. But we only get three waves, but it breaks the origin. It's extra tricky, and then it just shoots up. It goes up really fast in an impulse wave away from you. And that's what a flat is, and that's the difficulty of the expanded flat. And so that's why when this breaks the origin of the first wave, it's surprising that it goes up. So, but in an impulse wave, this is 1, 2, can't break the origin of that, and then 3, it makes a higher high, and that's usually the shape of an impulse or a regular a three-wave correction. You get a higher high in the third wave. So that's a standard thing. C is generally higher than A. So when you have a flat where C doesn't break that, and you're expecting it to come up here, but it doesn't. It just goes down. That's another way they can trick you with running flats. It's another way they can make it difficult, because it's like it's stubby, and then it continues down. You're like, oh man, and you're waiting for it up here, and you missed your entry, and because it was a running flat. So what you want to do is learn to count the waves. Okay, so the C wave is always 5 waves. So I'm going to call this A, this is B, and this is C. Okay, it may or may not be finished. So let's count the waves just real simply. I like to always pull the fibs when I'm counting impulses, because the C wave needs 5 waves. So I'm going to pull the fibs. Okay, this has not come up to the impulse level of the 1618. It could be because of this wick. That might be an issue. That might be part of the problem. This wick is so deep that it maybe, if we measured more from like right here, you see that clearly gets us up here to the 1618. So I'm going to call this a pretty good 1-2, even though it doesn't quite get to the or an impulse. We can go 1, 2. Now the question is this 3, 4, and 5? Probably not. In fact, I'm probably I already entered short, but I'm probably one wave too early. I'm probably going to cut it here and re-enter. Maybe 1, 2. This is 3. We're probably making 4 now, and then we'll go up for 5, and that'll be the 5th wave. Now what you can do is pull the fibs on the entire move and figure out where it's going to go. So we're going to measure the A wave, project it down from the bottom of B. Okay, and you can see we've hit the 1618. Again, possible problem with the fibs because of this extended wick here. We may do better to bring it up here, of course, or we may do better to pull the fibs from a line graph. So if I go to the line graph, I'll pull the fibs from there. And you can see how this wave may get up here to the 1618. And you can kind of see how this is, you got a 1 2 here, 3 4, and maybe 5. Now, I've often thought, yeah, there's one more hit to the high, but sometimes it's just that. And that's why I went ahead and went short, because I was at the fib level. I was at the 1414. I was at the 1618 on the candles. I went ahead and entered short just to make sure this doesn't go down on me, and I didn't miss it. But that's a flat right there all day long. So I feel very comfortable as a trader, at least, with the notion that this wave is going to reverse somewhere up here and come on down and make a lower low. I feel very comfortable about that, because this structure it's really, really a nice flat structure. Now, does the market have to do that? Can the market keep going up? You better believe it can. But when we're talking high probability and what the chart, when we see this structure in the market, most often it reverses after the end of 5 waves in C. And it's designed to do that. So there is a mini lesson in flats, just rehearsing, the rules for flats. Questions? I'm here to take them if you have any.
Hey, Jim.
Hey,
what normally comes after a move?
I lost you. Try again. Push to talk.
Hey, Jim, you there?
I'm here.
All right. What normally comes after a 335?
Well, this is okay. So there are 2 types of waves. Do you know the 2 types of waves? Can you rattle them off? It's always okay in my classes to say I don't know, and I'll never shame you.
You mean the 2 types of like a motive wave and a corrective wave?
There you go. Okay, those are the 2 types of waves. So what comes after a corrective wave? That's what a flat is. The market basically alternates between impulses and corrections. Right? So this was an impulse and a correction. So what comes next?
Oh, an impulse down.
Yeah. Because we got an impulse to start. We got a 3-way pullback. Now we go again. For at least 3. But it may go deeper. It may be, in fact, my larger count. So I remember that, I don't know if you saw this morning's live, but I have a larger count here. That's a larger flat. Do y'all want to work through this flat with me? Do you feel up to it? I can do it. Do you have time?
Let's do it.
All right. Let's work through this flat a little bit. But let me give the quick answer first for anybody that's got to go. See if I can get rid of all this stuff here. All right. So I'm looking at this as a flat. That means this wave right here, the C wave, what am I expecting it to be? How many waves? Always in C. It's one answer only every time. So if I say how many waves in C am I expecting? Just you should answer with.
Is it always impulse down 5?
Always 5. Yep. C is always 5. There's never an exception for that. So if it's an ABC, then you're looking for 1, 2, 3, 4, 5. So that flat, then I'm counting that at least as an idea that that's the 2 wave of this whole thing, and now we're getting ready to get a big impulse down that may be really deep.
That'd be nice.
Yeah. So this is one of two counts that I have. I have a bullish count and a bearish count. This is my bearish count. Okay. And it makes sense. So let me remove the drawings and let's work through this structure. The first thing I did was I identified this ending impulse that ended something. That was ending all of this stuff back here. I did that on a higher time frame. Once that was identified, I said, okay, what do I have here? How many waves do I have there? Well, that's a really tough one. But this up here is 3, 3, and that's a 5. That's a really extended flat. Then I have a little 3-wave move there. Then I have another flat there. Let's see, how did I do that? Da-da-da. Hold on a second. How did I count that this morning? Oh, I remember now. Okay, yeah. So I had 3 here. Okay, then I had a little 3 right there. And this is a 3, a 3, and a 5. now that's tough. That was hard for me. But nevertheless, I think this is the count. And that's a WX and a Y wave, where you have 2 flats. Flat number 1 and flat number 2. Connected by just a tiny little connecting wave right there as the X wave. And that's what we call a double correction. But ultimately, that's 3 waves. Okay, now I'm going to move on. I've been looking at this as 3 waves. I think that's incontrovertible as 3 waves. It starts off very correctively down here with an impulse. Good. And then I have this flat right here. You see the flat right there? So I got 3, 3, and 5, or 3. That actually could be 3 as well. So I'm looking at this as a 3, 3, 3 right there. So that's 3 waves. And then I'm looking at this as 3 waves. And so when you put all that together, you've got a W, X, Y. Why didn't I label that an ABC? An ABC is 3, 3, 5, and it's a flat where the B wave comes back 90%. This didn't come back 90%. But this is a 3, a 3, and a 3. It's a double correction again. And that's why it was hard. It doubled the correction up. We had a nice 3 wave. That was enough. We could have gone down from there. We expected to go down there from there. We should have gone down from there. It didn't go down from there because they doubled it up to make it hard. And now, because this is 3 and that's 3, I'm expecting 5 waves down to screw everybody up, because that's what everybody was expecting. And remember what I always say. The market often does what we expect, just in a way we don't expect it. And there it is. And that's going to be a 3-wave move that finishes this correction. Once this is done, this may take a day or two to finish. But once that's done, I think we're going to get a bullish, I think we're going to get a big bullish move up to the upside for the first couple of weeks of September, until the latter part of September when we have a market crash, that's my prediction. So that's kind of the way I'm looking at this wave overall, so that when so that's my big picture, right? Now let's measure that and see if that actually measures each wave. Let's see if they measure correctively. So I'm going to measure right here to there. And this one came down to the 786, and that's fine. That's fine. They usually get down to the 1-to-1, but 786 is part of the corrective pocket. Now let's measure this one. This one came right to the 127. Boom. That's the high probability zone. And now if we want to project where this one's going to come, I simply measure A, or the W, or A, that's A, and I pull back from B. This is a big B wave. So this is A, B, C. And we're looking for it to come anywhere in the corrective pocket between the 786 and the 1618. The high probability zone, right here. Now, how do you know when it's going to end? Well, what do you do to figure out which one of these is more likely targets? That's why you need to pay attention to the sub count of the waves. You really need it. When does that fifth wave ending? So I don't have a price, except I've got these price targets here on the fibs. But what I'm going to do is watch the structure of this wave. And once I get a finished 5-wave move that looks something like this, then I'll go long. At least that's an idea for now. We'll see if it plays out. So now that I have a big picture on this larger time frame, 30-minute, 1-hour chart, I can now go down to the 5-minute chart, and I can look at the current wave structure that I have, and I say, do I have a plausible 1, 2 here? Yes, maybe. Maybe there's one. See how this looks like 1, 2, 3, 4. Maybe one more hit to the high. It looks plausible that we might get one more wave to the high. But it doesn't have to. It's already at the 1618 fib of that pull. I could simply do this and pull the fibs here. And that's 1, 2. With how big this is, I would draw this wave probably down to the 2618. With how large that structure is, just to give, that would be my guess. If I can get this. Oh, stop. So that would be my target zone that I'd be watching. That's the wave shape I'd be watching for, and in this current, that's my hypothesis. That's what I would have on my chart. And if this goes up and breaks this high, then that's my line of death. That's the yellow line of death. And if you're new and you don't know what the yellow line of death is, that's the death to my count. That's the invalidation point to this count. If the 2 wave goes up and breaks that high, then my count is incorrect. And I'll have to go to a different idea.
Jim, is this chart pretty much the same for BTC?
Probably. I know it's the same for ADA. We had this 3-wave up. Now, then we had this 3-wave down. And then we got this 5-wave to the upside. 1, 2, 3, 4. Yep. It's a tough count there for 5, but so maybe, unless that count's incorrect, which it could be. Let me give an alternate count for ADA real fast. Sorry, I'm just looking at the small time frame here. See how we got 3 waves down and now we're getting an impulse beyond this? It's letting me know this is probably going to go up and make that 5th wave I was talking about. So I'm going to go ahead. I wish I had cut but I didn't really know until that candle. Wish I had cut my short so I can get a better entry. You can cut your short or you can hedge along right here. Those are 2 ways to handle it. Hedge along there, and that way you're in the trade either way. So if it goes up on you, you're kind of in and you can release your short. or if it comes up, you can take some profit on the long and then let the short ride from that point. So different ways to handle that. But I was kind of looking at this like I got 3, and now I got 5. But it didn't really give me a 5-wave shape there that I like to see. In fact, this kind of looks 3-wave-ish to me. So not sure. Let's look at BTC quick since you asked about it. Yeah, BTC is much different. I'm counting BTC as a series of 1-2s. That's my bearish bias. That's an impulse down, and that's a 2-wave back. That's an impulse down, a 2-wave back, an impulse, and a 2-wave back. What would follow is going to be a very, very large 3rd wave that's gonna start waterfalling and be very impulsive to the downside. Now, that's my bias count. Let me remove those drawings and look at this and see if there's a different way to look at it. 3-wave pullback. That looks like 3 as well. Let's measure it. See, if you don't know if it's 3, we got to measure it. Came to the 1618. Looks good. Yeah, this could be a really expanded flat. Yeah, it came. Something I haven't taught you in this lesson is that it retraced to the 127. Okay, so in other words, the retrace of the A wave was 127%. That's actually what we call the expanded pocket. That's a good A, B, and now we're getting C. C may be finished or has another wave to go. So we can pull the fibs here, project A. Oh, I already have it. We got A, B, and then C right here. Looks like we got 5 waves working. 1, 2, 3, 4. Need one more. Get you up here to the corrected fibs and then take a short. Now keep in mind, we've already hit the 1-to-1. This could go down from here. It could. I don't know if it is, but with the way this wave is looking, I would be more inclined to think it goes. This goes up from here to make 5 waves. Yeah, ADA. Yeah, this looks like a good 3-wave move. But I'm not sure what's going to happen here. It's awful deep. So it looks like a reversal, but I don't know. Hard to say. All right, guys, good questions. And there you go. That's just some real-time counting and real-time application of Elliot. Guys, I'll be honest with you, spend most of your time studying flats and WXYs because that's what the market is. Okay, spend most of your time studying those. Because that's what makes the market difficult on every time frame. Thus concludes this tutorial, unless there are any more questions.
Yeah, one last question.
Yeah.
Your charts are available on the Discord, correct?
There's a little section on the left underneath of this voice channel. It says Jim's Crypto Charts.
Yep.
And they're live charts. If I save them, you got to remind me. Sometimes I forget to. Like I try to do the analysis in the morning, and then I try to save the chart. I draw a drawing and during the live, and then I just save it. And that way you can kind of keep an eye on what I was looking for that day.
Yeah, and it's yeah, that's great. I'll take a look at it, and it's also just helpful too. Like I tune into I mean the majority of your lives, or I'll get a chance to watch the recorded ones that you have.
Yeah.
But it's really helpful for me to go into your charts
Yeah.
and try to see what you're seeing, right? So because sometimes I mean I'll watch one of your lives and I've done charting beforehand, and then I watch what you're seeing, and I was like, man, that's so different from what I was seeing. So it's just it would be helpful. It would be helpful just to take a look at yours and say, okay, this is what you're doing, and this is what you're seeing.
Yeah.
Because
I don't like to post like 10 charts with 10 different ideas because people get confused. What I like to do is post my next idea. That this is my current thought, that this may or may not get validated. This may or may not play out, but this is my primary thought right now. And I do that right after the morning lives usually.
okay, sounds good.
And I'll just hit the save button on the chart, and it'll whatever I have there, it'll just save it, and you'll be able to see that, and you'll actually see my lines. You'll be able to draw on my charts as well, because it's a trading view link, but it's a live link.
Well, yeah, I probably won't draw. I probably won't draw on your.
No.
charts.
No. It'll
yeah.
only be local. Everybody else,
Okay.
everybody else won't see what you draw.
Well, what I like to do is look at your charts and then have because I've got multiple screens, right? So I
Right.
like to look at your charts and then look at mine,
Yep.
draw them on, just practice drawing them on my charts to say, okay, this is how you came to this conclusion, and then try to figure it out myself.
Yep. So hopefully it's clear for flats, and this was a good example today of a flat where we had a 3, 3, and a 5, and now we look to be either going up for one more wave or we're heading down. So it's hard to tell if we're getting that one more wave or not. If we're getting 1, 2, 3, 4, and then 5, and if that's the case, we're going to get 1, 2, 3, 4, 5, something like that. And it's going to be a really kind of big flat, but I don't want it to break this top. But that would be fine, and then it could come down. Or is it done now and we go down now? So that's always the hard part to know. So that's why we enter small when we start entering the trade, like I entered up here, but we enter small, right? So if it comes back against me, I can A, hold it, or B, I've got more margin that I can just enter a hedge position, so I don't have to sit in a negative number while this wave finishes up. And that's how I enter trades.
Yeah, when you say enter small, I mean I think that's kind of a relative term. What's small for you?
Okay, it doesn't matter what's small for me. Let me tell you what should be small for you. Because what I say, do as I say, not as I do. Okay.
Well, that's what I'm saying. I think it's relative, right?
Yeah. Yes, but I'm
gonna
say
small, and you're like, I do 10 times leverage.
10. I don't care how much leverage you use. Just make sure that your leverage is such that your liquidation price is so far away that you couldn't possibly hit it.
Okay, yeah. That's yeah. So
I use 50x leverage.
Yeah, and personally for me, again, I use 5 or maybe 7 at the max.
Yeah, and that's fine. But really, you can leverage 1% of your account at 7%. Or no, excuse me. You can leverage 10% of your account at 7%, while I leverage 1% of my account at 50x. You know what I mean? It's just a multiplier is all it is. So I use cross leverage on Bybit, and it's at 50x set. So the most I ever enter is 25% of my. Now, when I'm feeling froggy and I feel like this is a definite trade, then I'll bump the risk up to maybe 50% of my margin, especially if I got the entry, bang on, and I feel good about it. I got to feel really good about that. But most often, I don't leverage more than 25%, and that I would never recommend that to you. My recommendation to everybody in the group is never ever have a position size where you've margined more than 10% of your account, and even that can be high, but 10% of your margin. That should leave 90% of your funds available to you to manage the trade if you got in at the wrong place or you get underwater for some reason and you don't cut it.
Well, yeah, like I said, I don't use high leverage, and I have a lot of my account. Normally, I mean, I'll have 90% of my account left over to be able to manage.
There you go.
But yeah, like I think I've said this to you before. Everything kind of scales up, right? So even that, even only using that, like I'm trading with 1.5 Bitcoin, so it's
That's a lot to me. I don't even.
yeah.
Yeah, you can. You want me to just tell you what my trade sizes are? My trade sizes right now are about 4 to 5 Ethereum,
Okay. Okay.
and I'm
Then,
and, I, and I'm
then maybe
making
that's an option for me
I'm
too. Is
making
to
three
take some
three
of,
to $500 a trade,
okay.
or 100 on a scalp, and 500 on a good trade.
Again, this may look different if you continue, Jim, on your trade schedule that you're on right now. Going
Yeah. But
forward,
once I get a
you're
certain size account, I don't think I'll continue, risking that amount of money. I'll probably back off the percentage. So
okay. Well, here's something. Again, it's the difference between like looking at it's percentage, like you said, versus actual dollar amounts. Because if you figure basically, you're doing the same percentage at $50 as you are at $1 million. I know it's huge extremes, but it's really the same percentage.
correct. No, that's exactly right. That's exactly right. And that's what my 50-40 trade challenge is designed to do. You just start off trading well with the same, good risk management on $50, and then you take your profit and you do it 40 times, and your trades get bigger and bigger
Hmm.
Yeah, talking with
as the
Stefan.
as the account grows, as it compounds.
Yeah, talking with Stefan the other day. I ended up changing my bullet size from 10% bullets down to 5% bullets, and it really helped me today in my trade
Yes.
by quite a bit. And I still had the high leverage, but so for instance, I was in what is it what is it, the XR, the one that spiked up today.
XRP. Yep.
XRP, yeah. So I was in it lower as it looked like it was going to go down, and it sprung up high like super quick, and I didn't catch it. But I was able to move my position to the top or into the middle because of the position size. And
Yeah. You had only had a
and I,
5% bullet fired, and then you fired another one, and now you're in the middle of that range.
yep. And I made a slamming amount of money on that for me for the size of my position. In the end, even though I was negative for quite a bit, when it came back around, it came
Yeah.
back to the end, and I was still only 10% in. That's such a good feeling.
Yes.
So little invested,
Yes.
and knowing that my position was like way up at $3.
Exactly. Nice.
Yeah, that's a good point. That's a good point.
So that's why we fire bullets. We don't enter our entire position at one location on the chart. So when you hear me say I'm short, that means I usually say I fired a bullet short. It means I've my total position size for me is going to be about 25% of my account. So I usually fire 2 to 3 bullets. Okay, that means my first bullet's going to be about 10%. 10% of my margin. Now that's for me because I'm really good at entries. I'm really good at it. I mean, my entries are usually bang on, and they're rarely in drawdown a long time. And if they are, it's not that much. So,
Yeah, and
I've
that's something. Like my entries certainly need a lot of work.
yeah, but that's just taking time, and that's what I'm. You know what I'm horrible at? Taking profit. Horrible at it. Because I tend to swing for the fence too much, and like I said today in the live, I just got to get in my mindset of taking profit. Just take that leg, take the profit. Take that leg, take the profit.
Since I've started your channel, I've gotten actually quite a bit better at taking profit. Like taking small, like it's like if the trade goes my way, it's like, listen, if I'm up $500-600, I'll just take it.
Take it, yeah. That adds to your account, man. And that can really increase an account quickly. So,
Yeah, I think since I've started your channel, I've because when I started off, I was a long-term spot trader, right? So I would make moves, I'd make moves on the monthly kind of thing.
yeah,
and that's been, since I started this channel, it's been a real shift in my thinking around trading. Because even when I started trading, when I really, I mean, started leverage trading when I didn't have a lot of experience, I was holding on to trades. You know, I'd make a trade and I'd hold on to it for you know 2 weeks,
And the
or I'd hold
market,
on for a week and a half. Next thing I knew, I was down $5,000, and I was like, wow. So this is certainly, it's been better for my mental health.
you see how the market just up and down, up and down. It's designed to take your money. I mean, that's just what it is. It's designed to do that. All this up and down stuff we've been going through, and that big flat that I just showed you on the larger time frame, 30-minute chart. You know, that was just all designed to be difficult, and it doesn't allow anybody to stay in a position and make any money if they're trying to hold it for any length of time. So the best thing to do in that environment, trade, catch a leg. We caught a bunch of the legs, and had you taken profit at the bottom of all those legs, you'd have a bunch of money. But if you were waiting for the big move the whole time, and you wait for it and it came back on you, you know, there you go. So it's just for me, even me. I've only been full time trading since April. I've been I'm in life transition right now, right? I've been teaching trading and studying trading for quite a while, but I've just gotten positioned in my life where I can actually trade now full time. Even now though, I've still got people calling me and asking me for to help them do stuff, and I'm having a hard time saying no sometimes because they're friends or former customers. And so anyway, I've got a little bit of a schedule even into September of stuff I'm doing for people as a contractor, and I don't want to be. I want to be trading and helping you guys learn and running the Discord. But anyway, today was such a day that I just stayed home today because I needed to. This is the last day of the month. I know the market shenanigans. I saw that flat. I wanted to let that play out and trade it. So that's what I did. Anyway, but yeah, it's just learning to take profit over and over and over, and not
Hey, Jim,
not
have
being
you turned
afraid.
on
Go ahead.
your fractional stop loss?
Say that again.
So Bybit implemented a new option where you can put multiple stops and multiple take profits. Have
No,
you turned that on for
I
yourself?
I have not.
So I found that that's been a phenomenal tool. It's the one thing in Bybit that I had a complaint about until they changed it like this last month. But I can take and put my stop for security purpose. And I know you're not a huge fan of stops, but it's one of those for those that do run it. You set your one where your invalidation point is, but then you can take another portion of your position, and as it starts to go into the green, you can chase it. And you don't want to chase it too aggressively. Give it a little bit of wiggle room, but when it makes that plateau, it looks like it might turn around. You can bring your a portion up there to stop out in profit. And if it continues on away from it, awesome. If it doesn't, awesome. But it allows you to kind of be able to step away when price is volatile, and you don't have to miss taking profit where you're like, oh, I wish I had done this. You just take a portion of it and you set it there, and if it closes, you guarantee that amount of profit. And that's been really huge for having a life and trading.
Excellent. Thanks for that.
Yeah, and I mean, it goes along with the lines of what you guys were talking about earlier of, when do you take profits? Like, well, it really can be difficult to tell what the wave's going to do next. But when you have that option to put just a portion of it there to close, you don't have to babysit it. It'll take care of itself. And days like today where like XRP, you could put your stop down there at the bottom. And then when it shot up like that, you just chase it up there and wait for it to come back to it. And it allows for a lot more aggressive price action without having to close out and lock in that profit ahead of time.
Nice.
I wish I was better at that kind of stuff. I've learned right now that when I get a very good trade and I finish it, I walk away. and then I come back after my adrenaline has dropped, and I'm back thinking straight instead of trying to get.
Oh, that's so wise. Peter, I've been thinking about that. You know how you finish one trade and then you want to just jump right into the next trade? That's sometimes the worst thing in the world to do.
Absolutely, and it happens both ways. At least it did for me. It's like if you win a good trade, you want to jump into another one because it's just you want that hit to the high. At least for me, you want that hit to the high of getting another good trade in. But I found the same thing happens.
Revenge trading. Yep.
Oh my God! When you lose a trade,
Yep.
and you're like, I need, it's like, I need to get that
Back.
I need to get that trade back.
Yes.
And it's like you jump into another trade, then you lose it again.
Yes.
And you're like, oh my God, now I'm down 2. I need to jump into another one. And
Yes.
it's just like all the rationale and the thinking just goes right out the window. Honestly, man, I've said this before. I had it happen to me back in July. It was so bad for me that I had to walk away from trading for 2 weeks. Like I stepped away because I was just like, I couldn't believe how much money I lost in such a short period of time, because I was just like, that's exactly what happened. I just wanted to get that money back, and I just didn't take a step back. Take a step back to be like, wait a minute, what's going on here?
Yeah, and that's why this game isn't really about setups and Elliott waves. It's about risk management and psychology, and that's it. But now for me, the best setups in the world are Elliott setups. I like Elliott. I do. I love it, and I love the setups because they're precise, man. We nail a lot of entries here. We nail a lot of trades here. We don't nail every one. We miss a lot, but so does everybody else. You know what I mean? But if you're going to have a strategy and a setup, my choice is Elliott. You can do whatever you want to do, but it doesn't matter. That doesn't matter. It's about the risk management and the psychology. You don't have that, you're dead. You are dead. And that's why I keep offering, if any of you guys are struggling, you're losing trade after trade, let's just have a conversation, and I'll diagnose you in 5 minutes. And we can put a stop to the losing. You don't have to keep losing.
I think one of the crucial things that you kind of mentioned today that's been kind of there amongst the using your trade chart has really helped a lot. But also, I still think, at least I did for the longest time, people really just don't understand bullet size and really the dichotomy of what that is.
Yes.
How that works for you individually, and creating one that works for you, and creating reasonable expectations for yourself.
Yes.
And what you're doing and how you're doing it.
Man, Peter, you could teach now, man. I mean, you're nailing it, man. I'm telling you, what you're saying is golden. Yes, and amen. The key things he said were reasonable expectations for your account size, bullet sizes that are manageable, and good for psychology. What else did you say?
The bullet size for you as an individual.
Yeah.
Like, the first thing when you did your chart system, I had to when I first started doing it as a new trader. I don't nail the entries like you do, and that wasn't a reasonable expectation for myself. So I took my percentage down to a percentage that I could work with in order to do my daily goals. As a trader myself, to figure out what I could do, so that mentally I was making positive trades and not feeling like I fell short.
Exactly.
So I had that expectation, and then I had to make my bullets smaller. My first bullets that I was launching were like 50%.
Yeah.
All of that trade in one trade. And then you watch your account just.
I'm convinced the market, the exchanges they calculate, like they have the liquidation prices. They know who's over risking their. In other words, I'm convinced that there are accounts where, if you're over risking your account and your liquidations are close, that there's some kind of computer generated alarm that triggers their algorithm to alter a little bit to go get it. I'm convinced of that.
Yeah, I'm absolutely sure that they have algorithms that do that. For sure.
that basically people that have over leveraged their account and their margins, their liquidations are radically too close, that they will all, whatever the algorithm that was working at the time, it gets rewritten to go take out that liquidation if it's close enough.
Yeah, and you see scam wicks all the time on certain exchanges, but Binance is absolutely terrible for scam wicks.
Which one of the other things, kind of along the same lines of, what happens when the trade goes against you. Whenever I've got a trade that's in the green and I've gone in heavy enough to do this, where it's, if you're only firing a small bullet, you can readjust if it goes into the red and you haven't invalidated. But if it's in the green, I oftentimes will take a portion of the trade and set it on the take profit side of the line, so that I can add it back into it again on the other side of the line and help with repositioning. And it's more of an advanced technique to fiddle faddle on that level, but it's proven to provide that little bit closer entry, and I'm not really sacrificing my position when it's coming against my entry point to that degree. And so just putting it a couple percent into the green side, it wicks on through, and then I'm quick to add back to my order, but I've essentially taken the original order and moved it when it would have been moving against me into a more advantageous position.
I get it. Lots of things you can develop for yourself as far as practices that you can do to really do cool things. So, all right,
It's the most part's been the psychology of not holding on to any trade too tightly, but then holding on to the correct trades appropriately.
that's so hard, isn't it?
Oh man, every day.
So hard. It's like the fear of missing out. You don't want to take your profit. You might miss out on more. So that's the problem with and the solution to that, I've said it time and time again, regardless of, and this is hard from a biblical standpoint, but godliness with contentment is great gain, the scriptures say. Paul wrote that to Timothy. Godliness with contentment is great gain. And you apply that to trading, how true that is. You manage that greed. You don't have the love of money, but you have a godly sense of money, of utilitarian sense of money. Okay, with contentment, be happy with what you got, and you'll gain. You will gain. It'll be great gain. So, anyway, that's a good one to put into practice. All right, guys. Well, that was a great little impromptu live. Hope you enjoyed it. Good recording as well. I don't know what to call this one. It's flats and risk management. So.
Yeah, it was great. Thanks, Jim.
Yeah, no worries. When I'm completely done with all my contracting work, I'll do a lot more of these. Just had a teachable moment today, and I'm home. So, anyway. Y'all have a good one. We'll see you. I don't know. I'll see you in about 2 hours for the evening update. We'll see if the market's moving where we want it to go.
Sounds good, man. Thanks.
See you guys.
Thanks, Jim.